Hey everyone, hope they're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. Dive right in, take a look, see what's going on today. If you want to follow me, it's at @Finance, and if you want to join our community, finding-value.com, where I dive deeper into all of these topics, sectors, looking for investment opportunities and sharing those opportunities with everybody in the community. I did release a midweek update. Check it out if you're interested. That's where I share my opinions on individual companies and sectors and what I think looks really good. You can use special as a coupon code if you'd like to sign up. It is 50% off the first month only, which equates to $25 for that month. And if you want to swap or go directly into a yearly membership, that costs $500 for the entire year. And you get to get those midweek updates and Q&A sessions on the weekends. And there's some trainings on the website as well, and everything else is uploaded to the website of previous midweek updates and stuff like that. And you get to see my portfolio. You get to see me build a portfolio in front of everyone. I built a Roth 401k. It's been 1 year now because I opened that up. I think it was October, November of 2025, and that portfolio is up 42% or 43% or 41, 42, 43. It's, bouncing around. And that's what it is for the 1 year return so far. All right, coming down, Sahara says silver looking bullish, yet watch for the bear flag. So we've got a bear flag call here where silver could potentially go lower. And I'm just watching all these people put these projections and predictions in on Twitter. They're all over the place. I'm kind of laughing at it all, and I'll show you my opinions after this. But this is a bear flag call potentially. I don't necessarily think it's a bear flag, but some people are calling for it. We've got the shakeout before the breakout on rock bottom entries of the 45-year cup and handle pattern. This is the handle portion of it. He says the shakeout before the breakout. So he's in the bull camp versus the bear camp, which is directly above us. And then we've got Eric Yoon. Well, this would explain why LBMA went from 5,000 tons of physical silver free float to zero within 2 weeks. Another accounting error like one they had in 2021. Obviously, they are probably lying. it's probably what's happening, but it's due to an accounting error, guys. Yeah, we just don't have the metal. We've just been jacking around with the physical price or the futures price. Uh-huh, uh-huh. Here's one that says we're going up. Silver above 51, that's the path I like best, and the one I've outlined. We'll see how it goes, but in the long run, it has to rise anyway. So we've got the inverted shoulder, head, shoulder, and a potential run higher is what I see there. So we've got the inverted flag pattern, number one, the shakeout before the breakout, and then we've got this guy going up. Well, what's my opinion? Well, this is what I would do. All right, I'd go look at something like SILJ. Right, SILJ is a junior mining company ETF. So junior mining company ETF. This is a launching pad, and we've got a bunch of volume stepping in, buying it on the breakout. I would say that this is the beginning of a trend. This is the beginning of a very big move in junior companies. And we don't have a lot of selling pressure here. We've got a little bit of a consolidation going on. But I would say, so what? Tariffs. Stop focusing on the short-term market gyrations. The big picture here, this is the base, this is the breakout, and we're just getting started, guys. So what would I think about silver? We're going higher. And I'm not saying that from a short-term market perspective. What I am saying is we got a ways to go. I don't know if we're going to pull back in the very short term here. That's just I, the short term is very difficult to nail. And you guys know if you're part of the website, the very, very short term, you're going to get a lot of volatility. And then, as you've noticed with a lot of the holdings that we have in the portfolios, you get in, you get a little bit of volatility. You could go negative in the portfolio on that position in the beginning. Then, as you wait and you progress through the market, things really start to take off. Sometimes we get volatility from certain portion of the year. Those are generally good buy the dip opportunities. So it's kind of like this big bull market that we've gone up, bam, and then we've got this big consolidation. Now palladium is over here. Palladium's right there. This is silver, but palladium's just starting to break out of that double bottom. We have another double bottom here. That's broken out, did that, and now we are ripping higher. So I think we are in the move to the upside, and we probably have a good chunk to go. Now, if I were to grab this entire cycle here, that's the cycle. Check this out, guys. I'm going to overlay it and squeeze it. There you go. Do you guys see that cycle? Yeah, that's right. A good cycle there, baby. That's what I think will happen. So we'll get something on the lines of that. And we'll go to a few $100s, maybe even 500. I don't know. We're going a lot higher, put it that way, in silver from where we are today. Now we could get a consolidation at some point where we chop sideways. That doesn't mean the miners will go down. If we stay high, the miners will continue to make very good money. So I do think that we're coming up. We could pause, maybe oil rips at that point, and then continue higher after that. Something on the lines of that I think is highly likely. And another thing that you can use is SILJ divided by say SIL, and we can look at this. We can see these bottoms here. We're starting to come on up. Usually SILJ, when it outperforms SIL, uh, is saying something. We're in the bull market. We can also do SILJ divided by silver, the futures pricing, and that has broken out. We have a little bit of a return move, but we didn't. This isn't like the huge bull market. I think we go all the way up, maybe even up here or more. So I think we're just in a consolidation. Now, if we pull back more, could we pull back here? We could. Why does that matter? Like no one's going to nail the way that this thing moves in the short term. It is too hard to get. If you just get the big picture the big picture view, buy the corner, and then wait, that's all you can do. I don't think you can nail the very short term little market gyrations perfectly. And even if you do, you're just going to rack up taxes like no other if you're trying to play the short term. I thought this was funny. Rock Bottom says silver breaks out for real now. Cycle investment strategy says no. And then he says the wall of worry is healthy. Oh, I love it. I love it. Uh, what do what do I think here in silver? If I were to make a guess, I think we're going to go higher. This is a falling wedge into a double bottom, and I think it's broken out here. Could we get a return move back like that before heading higher? It's possible. Uh, I think we're in an uptrend, and I think we're going to go higher. All the all these guys that they're trying to predict the short term. It's everywhere on Twitter, guys. It is everywhere. Everywhere I look, prediction short term, gold, silver, Bitcoin, all these different individual companies, stocks. Everyone's trying to predict the short term. You know where I made all my money? This is how I made all my money. I took advantage of the short term and then I just went long term. So I don't play the short term. If something gets cheap and it looks like a bottom, I buy it. If I'm wrong, I wait and then I look for the bottom again and buy more. And then I just sit and I wait. And when you back out, if you're getting caught in people trying to, play these market gyrations here, coming up and coming down, and everyone's trying to call, oh my God, what a huge move in silver, the big move to the downside. It's like, I was buying here, I was buying here in 2018. I was buying all over this. And then when you step back and you look, it's like, well, that looks pretty good. I mean, uh, the little market gyrations in the short term going up and down, I didn't play those. I just bought when it looked cheap and just holding on. And here we are heading higher, and people still are calling for big pullbacks. It's like they can't just let it go. And I, I don't know, guys. I just find it funny because, like, there is so much short term crap on Twitter. I don't know if I had 1/100th of the knowledge I have today, like, what if I was a new investor, I would get so confused. I would get so confused because everyone has all these differing opinions. And my suggestion is don't listen to them. Do not listen to the opinions. Do not even listen to analysts. A lot of the analysts that try to make opinions on companies, I used to read these analyst reports. What a waste of time. What a waste of time. And it would get you completely confused. Um, it's all a waste. And I had to develop my whole, the three pillars of investing and all that to figure out the markets myself. BCI, Bloomberg Commodity Index for commodities, is breaking out here through some resistance. He says shoulder, head, shoulder, and I would tend to agree with this. Now, as you look and you're looking at silver, you're looking at the Bloomberg Commodity Index, you're starting to look at oil. I see oil is strengthening. You guys have, I don't know if you've noticed, but natural gas is broken out. It's looking fantastic here. It's broken out of a big resistance level to the upside. It looks good. It looks good. Now, I don't care what someone tells me in the short term. This is what they'll say. They'll say, Andy, what if we get a recession? Well, guys, this is breaking to the upside. This is breaking to the upside. Copper is trying to break to the upside. You can't pull that. You can't be like, well, oh, we're going to get a recession. If we're getting a recession, this would be breaking down. So what you're saying is, if something occurs that the market is not doing, I mean, you can't look at the market that way. You can't just be like, what if, and then pull it out the rear end. What you need to do is you need to look at what it is saying. Is natural gas, I'm just using this as an example, is this bullish or bearish? It's bullish. It's breaking upwards. So you can't be like, well, what if natural gas goes down? That contradicts the evidence and data that we see in the market. If you look at um, the Dow Jones Transportation Index, let me go to that one there. That's DJT, and then you say, well, what if we get this gigantic recession? It's like, well, wouldn't this be falling then? Why are we going up? Is it done? Was this the pullback? Is this the pullback there back in 2020? Did the pullback already occur? This is '08, this is 2020, and this here was the pullback from 2024 down to 2025, and the bottom in April, May of 25. That could be the bottom. Maybe it's already behind us. You get what I'm saying? You can't just pull this unless the charts match what you're trying to ask. So that's where I get like confused. It's like, well, the commodity index is breaking upward. You can't pull, what if we get a recession? Well, then commodities wouldn't be doing this. It's already behind us. The recession was back here, most likely. And no one knows for sure, but that's the way that I view the markets. It's adding charts up. It says, how high can natural gas prices go this winter? And it says, you don't want to know. It says, if, and it's a big if, Mother Nature doesn't ruin the party this winter, we could be in for a big surprise to the upside. I'm positioned for it. Let's go. Let's let this thing rip. There's other tertiary effects of natural gas going higher as well, like coal, urea ammonium nitrate, and we are also positioned for those things going up. LNG feed gas demand hitting nearly 20 billion cubic feet per day over the weekend. Look how much higher that demand is over just previous years. Holy crap, that's a big move higher. We got a lot to go. A lot of LNG demand takeaway capacity is here. Here's another one, silver. Everyone, including my grandmother, sees the current rise of the price of silver as B. So it's an ABC correction, is what they are anticipating. But what if the C never comes and the B just keeps going? Don't get caught waiting for a drop that may never come. I don't trade this, guys. I do not trade it. Last time I tried trading this crap, I got left out. And it wasn't silver, it was other things. I am not trading this. I think trading it is just not the way to play this. I think we're in a gigantic, big, long term bull market in gold and silver that could last a lot longer. It's going to last for however long interest rates keep going up or remain elevated. And everyone's going to try to play this in the short term. They're drawing all these little charts. I like technical analysis, but in the short term, it's very difficult to get right. There's very few people, if any, that make money using short term chart patterns. So I use them for the big long term stuff to identify where we're at in cycles. But in the short term, man, it is really, really difficult. And a lot of people put so much emphasis behind their short term opinions that I just shake my head. It's like, don't do it. Just don't do it. This is silver, looking at it from a momentum perspective. So it says, remember, this daily long term momentum breakout for silver, a 5 year long term daily momentum wedge breakout, where the price went from 40 to 55 in a blink of an eye. We are now back testing it. The best is yet to come. $90 to $100 silver is the next big target. And this is momentum. See how it squeezed up, broke out, and did a retest? So if you take this and I were to tell you what this kind of means, and what it means is that the momentum broke out to the upside. We're doing a retest to basically shake out everybody. And then I think we're going to accelerate to the upside. That's what this is saying. So momentum's going to pick up, not go down. So we should see a surge in silver to the upside based off of momentum. And I would agree with that. I think that we probably are going to go higher, not lower. And we could surge to, 90 bucks, 100 bucks, something like that. Totally. Totally. And we could see a big move in the silver miners too. Here's another one. Silver looks like it may confirm a 45-year cup and handle breakout this year. Though there's plenty of time left, the 2025 annual close is going to be a very big deal one way or the other. The measured move to the $660 area with a possible trip to the upper channel rail above $1,000 an ounce. So some people are getting pretty jiggy with it. If you start measuring up previous bull markets to this potential bull market, I don't know where this will end up. All I know is that the pattern's big and we could potentially get a very big move out of silver. Trying to trade the short term with a pattern this big is not something I would do. I think you're missing the entire big picture out of this. The big money is made in the big, sizing up the big trend. And the big trend in silver, and you're only going to get this once out of your life, is up. So stop jacking around with the short-term market movement, drawing lines off of short-term technicals when you've got this gigantic pattern sitting here that can change your life. Why are you jacking around with short-term market movements? It's completely uncalled for, in my opinion. So Get with the big picture, the long-term view. Now, I look at a lot of junior companies and producers, and all of them have bullish setups. All of them. So I am in the bull camp 100%. And to not be bullish here, you're just not looking at the right stuff. So could we get a further pullback? Anything's possible. But the big picture view is all up. The producers are back testing big breakouts. Hecla Mining broke out of a 45-year downtrend line. This is not the time to be playing short-term market movements. I mean, this is where you can get jacked up. This is where you make a 100% increase in a company and then it runs on to 2,000, 3,000, 4,000% gains. Oh, wow, you made 100%. You can buy, or you made 100% on your move. And, people are going to say, well, pigs get slaughtered, don't be greedy. Okay. Do you not see the 45-year cup and handle pattern here, guys? Like, this is the time to lock it in. Like, lock in yourself, lock in this big picture view pattern. I'll pull up a company here, okay? We'll do, here's Hecla Mining to help you guys out. Um, Logarithmic. We just broke out of this gigantic pattern, guys. This was in a downtrend starting in 1968, and we broke out just recently. You think this is going to run a big way? Yes, it is. This is the beginning of something that is new. Like, this isn't the time to jack around here. CDE. Now, these are companies that we do own on the website. I like the junior stuff now, so that's why I'm showing these. But this is broken out, guys. This is a breakout to the upside. And this is some of the stuff that we look at on the website with individual companies, just so I can show you guys. Now is the time to lock in and just hold. Not the time to be like, oh, I'm going to try to trade this down a little bit and rebuy it and do whatever. No, 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 no. These things they're going to go. And here's, Endeavor Silver. This is a launch pad. The launch pad here of a big move with big volume stepping in. This isn't the time to be jacking around, playing with small market movements when you've got these big patterns that are right at the tip. And I just showed you 3 examples of producers that could rip to the upside. And again, we entered some of those very low, and we are riding them. And here's another example. Here's New Gold that recently got purchased out. This was one that we entered in this corner over here. And that is from $1 to $7.45, and it just got purchased by another company. So this is all about relax, get your positions, ride it on up hundreds of percents, and let it go. It says everyone's watching tech. Meanwhile, the commodity index just broke a 3-year downtrend. The super cycle is waking up again. We are in a super cycle. Yes. We are waking up. Yes. Oh, but let's try timing the short term on this. Guys, we've got thousands of percents ahead of us. Thousands in a lot of the companies that we are in. Just let it go. The short-term market noise is a distraction. Do not let short-term market noise distract you. That was my problem when I was investing back in the 2000s. Do not let it impact you. You need to get up to a certain emotional stability where you can handle some hits in the downside. When things break out, they generally do a retest. I am seeing retests right now in a bunch of different commodity stuff. So what that means is we can go back to this one. This is a falling wedge. This is your double bottom, and then they've broken out, and then they're doing the retest here. That's where a lot of commodities are at. There are some that are down here too. There are some that are down here that we are buying on the website. Now, I'm only showing you this one because it's already run. and we've already purchased it, and it's run. This is not what I would buy today. I'm looking for companies that are down here or here. Those are two good areas to be accumulating in. So yeah, and then we've got a bunch of commodities that are doing that. But that's where we're going to end it for today, guys. That's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. Specials and coupon code. And the midweek update, I'm going to be showing patterns like I did with EXK, CDE, and New Gold there. I'm going to show you companies that are down, that are coming down. Now, it's going to require patience. I'm not saying that it's going to take a little bit of time, because though, if you go back and you look, at New Gold, for example, we were buying this in 23 and 23. It usually stays down here for about a year, and it is your accumulation area, 6 months to a year, and then you get the big moves to the upside. We are experiencing these moves right now in certain sectors. Other sectors are putting this in. For example, just to give you an example, here's palladium. Palladium went through that falling wedge into the double bottom, good entry point. We bought a lot in this general area for the mining companies that do this. Now we've broken out. Your risk reward is different here than it was buying it down here. That makes sense? So what I'm trying to do on the website is I'm trying to get you guys good low risk entry points here, so you guys can enjoy the full asymmetric opportunity to the upside. So that's what I'm doing. So I'm going around and looking for those opportunities and sharing those opportunities right at that point. I also look at fractal sizing. Fractal sizing is the size of the patterns where they can determine. Fractal sizing is like the genetics of the company, and the genetics of the company determines kind of future projected movements. Think of it as like Fibonacci extensions. It's like think of it as like the bigger the pattern, the bigger the move. That's basically what I'm saying. So I'm going around looking at all these things. I'm looking at the fundamentals of the company. I'm looking at the fractal sizing, the technicals, adding it all up together, and then putting opportunities in front of everyone in the community that's a part of us. It does require a little bit of patience if you're going to try to buy some of these at bottoms. And I'm not stating that it will go up immediately. I'm not short-term trading this. I'm getting long-term positions, and I'm really diving in and thinking about the positions. I'm thinking about the sector. How is the sector going to perform in the long term and the fundamentals of the sector? Then I go and I look at the individual companies, and I ask, well, how much risk am I taking? Is it cash flowing? If it is, are they going to pay dividends and share buybacks, and how are they going to return capital to shareholders? And I'm trying to fit this all together for a 10-year or 20-year hold. Some people are going to say, well, that's really long. It is. But if you're at the bottom of what I think is coming in some of these sectors, I think it's possible that you could pull some hunter baggers out of this, in all honesty. But you're going to have to hold for a while. It's not going to happen in a year. But and not all the plays are like that, but there's some that I'm really trying to think and get in. Like, for example, just to give you guys an example, most of the copper mines in this world are pretty exhaustive. The ore grades are well below 1%. They're approaching 0.5% or lower. A lot of the new projects coming online are 0.2, 0.3, 0.4% ore grades. Very low, very energy intensive. But what if there is a copper mine or two in the world that is 5% or 8% ore grade? And it's a very big one. What do you think that would be worth in a world where copper becomes a lot more valuable? That's the kind of thinking that I try to apply. It's like, okay, well, what would this really be worth? And those are the opportunities that I'm putting in front of people. So, all right, guys, that's all I've got for today. So look for the midweek update, and that's all I've got. See ya.